Hello and welcome back to Stock Explorers. Great to have you with us for another deep dive.
Absolutely. Today we're tackling Block Inc.
Right. Many of you probably know them already, maybe through Square point-of-sale systems you see in shops, or maybe you use Cash App yourself.
Exactly. They've got those two main sides. The Square ecosystem, really focused on merchants, helping them run their business, take payments, all that stuff.
A whole toolkit for businesses, basically.
Pretty much. And then the other side is Cash App, which is all about the consumer, sending money, maybe some investing, banking features. It touches a lot of financial activity.
So our plan today is to really dig into their latest results, Q1 of 2025, see what happened, and look at what they're saying about the future.
Yeah, the goal is to pull out the key stuff that might be relevant if you're thinking about Block from an investment perspective.
Okay, so Q1 2025. It sounds like it wasn't exactly smooth sailing. The market definitely reacted.
Yeah, that's putting it mildly. The results came in and, well, they missed the consensus estimates pretty significantly, both on revenue and adjusted earnings.
And the stock price reflected that disappointment, didn't it? Like an 18 or 19% drop.
Something around there, yeah. It was sharp. Investors were clearly not expecting this, especially since Block had a pretty good track record of meeting or beating expectations recently.
So let's break down the numbers. What was the actual revenue figure?
They reported revenue of $5.77 billion. Some outlets rounded it to $5.8 billion. Either way, it was well below the $6.18 to $6.21 billion range analysts were looking for.
And the earnings per share, the adjusted figure.
Adjusted EPS came in at 0.56 cents. The street was expecting something closer to 98 cents, so quite a gap there.
Yeah, okay. And the gap number?
The gap EPS was 0.30 cents. So yeah, a clear miss across the board on those headline figures.
What drove that miss? Was it one specific area or kind of broad weakness?
Well, a big piece of it was definitely Bitcoin revenue. That was down about 15.7% compared to last year, landing at $2.3 billion.
And the expectation was higher.
Yeah, estimates were around $2.7 billion for Bitcoin revenue, so that hurt the top line quite a bit.
What about other revenue streams, like transaction fees?
Transaction-based revenue also came in a little late. $1.55 billion versus the $1.58 billion expected. Not a huge miss, but it contributed.
But not everything was down.
No, actually, subscription and services revenue held up pretty well, grew 12.4% year over year to $1.89 billion, which was basically right in line with estimates. So some resilience there.
You mentioned the gap EPS was 0.30 cents. Was there anything specific impacting that beyond just the lower revenue?
Yes, absolutely. A major factor was a pre-tax loss of about $93.4 million from remeasuring their Bitcoin holdings.
Ah, the value fluctuations.
Exactly. Just to put it in perspective, in Q1 of last year, 2024, they actually had a gain of over $233 million from their Bitcoin holdings.
So that swing really shows how volatile Bitcoin prices can make their gap earnings look quarter to quarter.
It really does. Even if they haven't sold the Bitcoin, the accounting rules mean those paper gains or losses flow through to the bottom line.
Okay, so the top line and gap earnings face some definite headwinds. But what about profitability metrics like gross profit or adjusted EBITDA? How did those look?
Right, that's where the picture gets a bit more nuanced. Gross profit did increase. It was up 9% year over year, hitting around $2.29 or $2.31 billion, depending on the source.
Okay, 9% growth isn't bad, but...
But yeah, context matters. In Q1 of 2024, their gross profit grew by 22%. So that 9% represents a significant slowdown, a deceleration in growth.
How did that break down between Cash App and Square?
Cash App gross profit was up 10% to $1.39 billion, and Square's gross profit grew 9% to $898 million. So similar growth rates there, but both showing that deceleration from last year.
And adjusted EBITDA, you mentioned that earlier.
Adjusted EBITDA actually looked pretty solid. It grew 15% year over year to $813 million. That's a 35% margin based on their gross profit.
And adjusted operating income.
Even stronger growth there. It hit a record $466 million, which was up 28% compared to last year. That represents a 20% margin on gross profit.
So wait, gross profit growth is slowing down quite a bit, but adjusted operating income growth is accelerating. That seems counterintuitive.
It does, doesn't it? But it really points towards a strong focus on operational efficiency and cost management within the company.
So they're getting better at controlling costs, even if the top line growth isn't as robust.
That seems to be the story the numbers are telling. They're managing expenses effectively, boosting those adjusted profitability metrics despite the slower gross profit expansion, maybe tightening the belt in response to the macro environment or the revenue trends.
Interesting. Okay, let's shift gears a bit and look at the two main segments, Square and Cash App. It sounds like they had quite different quarters.
They definitely did. Square, the merchant side, actually showed quite a bit of resilience. Reports suggest they might have even gained some market share.
What drove that?
Seems like their product development and go-to-market strategies are paying off. Their gross payment volume, or GPV, that's the total value of payments processed, hit $54.1 billion.
How does that compare year over year?
That's up 7.2% year over year, or 8.2% if you adjust for currency changes. It was just slightly below the analyst estimate of $54.34 billion, but still solid growth.
Any particular bright spots within Square?
Yeah, international growth was strong, up 15%. That really outpaced the U.S. growth, which was around 5.6%.
And are they still making inroads with larger businesses?
Seems so. Those mid-market sellers, the ones doing over $500,000 in annual volume, now make up 41% of Square's total GPV. That's up from 39% last year. So definitely moving up market successfully.
Okay, so Square sounds relatively healthy despite the slight GPV miss. What about Cash App?
Yeah, Cash App, well, it underperformed expectations more significantly. Its GPV came in at $2.7 billion.
And the estimate was?
The estimate was much higher, around $3.54 billion, so a pretty big miss there.
Any reason given for that weakness?
Management pointed to changes in consumer spending behavior. They said it affected inflows into the app and also spending on the Cash App card. Particularly around the time people get tax refunds, it seems discretionary spending took a bigger hit than expected.
Right. That makes sense. So given this mixed Q1 picture, especially the Cash App weakness, Block adjusted their outlook for the rest of 2025, I assume.
They did, yes. They lowered their guidance for full-year gross profit growth. They were initially forecasting 15% growth for 2025.
And now?
Now they're guiding to 12% growth. They cited, macroeconomic caution and that softness they're seeing in Cash App. The new gross profit target is around $9.96 billion for the year.
Okay, so a lowered expectation for the full year. What about the immediate next quarter, Q2?
For Q2, they're projecting gross profit growth of about 9.5% year over year, targeting $2.45 billion.
So still in the single digits for Q2. But are they expecting things to improve after that?
Yes, that's the key part of their narrative. They expect an acceleration in the second half of the year. They're forecasting low double-digit growth in Q3 and then ramping up to mid-teens growth in Q4.
Interesting. So despite cutting the gross profit forecast for the year, they seem confident about profitability.
That's right. Even with that lower gross profit growth, they maintained their full-year 2025 target for adjusted operating income. They're still aiming for $1.9 billion.
Which is quite strong.
It is. It implies a 19% margin on that revised lower gross profit number. So they're clearly betting on continued efficiency gains or that second half acceleration kicking in strongly.
What are they pinning those hopes on for the second half? What's supposed to drive that acceleration?
It's a few things across both segments. For Square, they're counting on continued momentum from new products, that ongoing push upmarket to larger sellers, and getting more businesses to use their banking services.
Like Square Checking.
Exactly. Square Checking usage hit $3.6 billion last year, up almost 30%. So they want to build on that.
And for Cash App, what's the plan there?
For Cash App, a big one is rolling out Cash App Borrow nationwide. Getting that FDIC approval for Square Financial Services was key there.
Right. That lets them offer loans more broadly.
Correct. They're also focused on integrating Afterpay more deeply, trying to grow the user network, especially targeting teens and families, and stepping up marketing with this cash-in campaign.
Anything else?
Yeah. There's also the Proto initiative, their Bitcoin mining hardware project. They expect that to start contributing its first gross profit in the second half of this year as well.
Okay, so a lot of initiatives they're relying on. Are there other strategic things happening that investors should know about?
Definitely. On the Square side, they're actively enhancing their banking suite. Things like Square Checking with instant access and no fees, cash deposits, plus Square Savings with a decent APY and budgeting tools.
Trying to be more of a one-stop shop for businesses.
Precisely. And they're also working on a new unified Square POS app. The idea is to consolidate features, make it simpler for different types of businesses to use one core application.
We should probably also touch on the regulatory side. There was a settlement recently.
Yes, that's important. Block settled with the New York Department of Financial Services, the NYDFS. They agreed to pay $40 million.
What was that about?
It related to past compliance issues within Cash App, specifically around anti-money laundering, Bank Secrecy Act, and Know Your Customer stuff back in 2021, 2022.
And part of the deal involves more oversight.
Yes. They have to bring in an independent monitor as part of the settlement. And this isn't the first time they've had significant compliance settlements. It's an ongoing area of cost and scrutiny for them.
Okay. And one last point, shareholder returns. Are they doing buybacks?
They are. Through April of this year, they had repurchased about $600 million worth of their stock. So that signals a commitment to returning capital to shareholders.
All right, so we've covered the results, the outlook, the strategies. Let's talk risks. What are the main challenges investors need to weigh up here?
Well, number one is probably still the macro environment. How will consumer spending and small business health hold up? That's a big uncertainty for Block. And competition.
Fierce, absolutely fierce. On the merchant side, you've got Stripe and others. On the consumer side, PayPal, Venmo, Zelle. It's a crowded space.
How about their own execution? Relying on that second half acceleration seems like a risk itself.
For sure, there's execution risk. Can they actually deliver on all those initiatives? Cash App Borrow, Afterpay integration, Square banking attach rates, Proto contribution to hit those higher growth numbers. That's a key question.
And the Bitcoin volatility we talked about.
That remains a risk for GAAP earnings. We saw that $93 million loss this quarter.
Yeah.
As long as they hold Bitcoin on the balance sheet, that volatility is baked in. They held, what, about 8,485 Bitcoin at the end of last year?
Regulatory scrutiny is another one, right, given the settlements.
Definitely. Ongoing regulatory oversight and the potential costs of compliance are significant.
Yeah.
The settlements add up over $295 million cumulatively now, I believe.
Well, stock-based compensation is quite high. It significantly impacts their GAAP profitability, about $315 million just in Q1, and over $1 billion last year. And maybe a softer risk, but potential brand confusion as they continue the shift from the well-known Square name to the Block corporate identity.
Okay, so wrapping things up on Block's Q1 2025. It's really a mixed bag, isn't it?
It really is. You've got disappointment on the top line, that revenue miss, the Bitcoin impact. But then you see continued growth in adjusted profitability, suggesting decent operational control.
And a future outlook that hinges quite heavily on executing a second-half acceleration plan.
Exactly. Their future really depends on whether those growth initiatives pan out, how well they navigate the economy and the competition, and how they manage those ongoing regulatory and financial risks, like the Bitcoin volatility.
So, lots for potential investors to consider. As always, we encourage everyone listening to do your own homework, dig deeper, and think about how this fits with your own investment strategy.
Absolutely. Due diligence is key.
And if you found this deep dive useful, please do subscribe to Stock Explorers, maybe give us a like, and hit that notification bell so you don't miss our future analyses.
Thanks for tuning in.
Thanks, everyone.